Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you in different attire than normal, than the tie and the suit. And I think this is much better because it's, of course, the eve of Independence Day. So first up, let me wish all of you a very happy Independence Day. If you're celebrating it early, tomorrow, of course, is a market holiday. We're coming to you, as I said, from the Motilal Oswal CNBC TV 18 studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, good morning.
Hi, good morning. You know, this year, when we enter Independence Day, the entire geopolitical environment is a bit challenging. So let's hope we come out, we turn our challenges into opportunities, and India emerges united, strong, and self-reliant. Freedom we've inherited. But now it's time to take it forward.
Well, that's right. You're looking forward to the long weekend, right? I mean, 3-day weekend. And for those children who had a Thursday holiday, well, they've got a longer one. 4 straight days.
It is a holiday?
For some schools, yes. As you're growing up as well, there were some schools. So you long for these kind of long weekends. I'll tell you what.
Someone told me this is the last long weekend.
Yeah, I think so. I think so. I think so.
And guys, there's a day to go. So
and in September, there's no holiday. So, but besides that, talking about the markets and how challenging it is, I think today is the day you remember the big bull, right? Rakesh Jhunjhunwala, death anniversary as well. And he always said, right, in adversity, you know, you look to buy, you look to be invested in India's long-term story. So remembering the great man, may his soul rest in peace.
Absolutely, and I think that's a nice tribute, Nigel. Let's just, as always, take a quick look at where things need to, what you need to know as we start another session, right? You basically have, and I want to start with not what happened yesterday evening, but what's ahead of us. And it's basically two things. One is the Trump-Putin meeting, and I'll talk about this in a little bit in greater detail. But equally important now, which was not in the mix a couple of days back, is Prime Minister Modi's Independence Day speech from the Red Fort in Delhi. The second one, PM Modi's speech, especially in the context of where we find ourselves, a bit of a tough spot, back against the wall. And I know it sounds cliched and everything, whether, another wave of reforms, and some have said the 91 moment. Well, don't go that far, but I think another leg of reforms, I think, would be pretty welcome to basically unleash entrepreneurial forces and, of course, help job creators in that sense, because that is the need of the hour. The first one I'll get to in just a bit. But before that, let me just quickly recap overnight action, which is not very much. S&P was up about 1/3%, Nasdaq 0.14% higher. Small caps, by the way, last 2 or 3 days have been doing a little better. So you look at the Russell 2000, it was up 2%. So large cap tech has been outperforming. Small caps have been doing much better. Macro markets, 10-year yield, 5 basis points lower. Dollar index was down about 0.4%, 97.7. I mean, that's a big one, right? And day before yesterday. So this week, actually, we've lost, 1.5% so far on the dollar index. The broader dollar, that's quite consequential. Oil prices, 65, just under $66 a barrel is where we stand. CNBC, in the US, reported that 11 candidates were in the running for the FOMC chair, which is, essentially a replacement to Fed Chair Powell. Remember, Fed Chair Powell's term only ends in, I think, May of next year. So he's got a while to go. President Trump, though, after that report aired on CNBC, came out and said that, the Fed Chair pick was down to 3 or 4. So CNBC said 11, and Trump said that, well, it's down to 3 or 4 picks. Actually, it's not about, who. Of course, it matters who. But I think what matters more at this stage is when. When is the announcement? Because if the announcement is now and somebody's going to do backseat driving, if, say, for example, they announce that so-and-so is going to be the new Fed chair, what happens to all the subsequent meetings where Fed Chair Powell is essentially, will he be able to hold sway? Will he be able to do what he wants to do in terms of policy decisions, etc.? Or somebody essentially else is going to be doing some backseat driving. And that's essentially the concept of the shadow Fed. So it's when more than who at this point in time. So we'll see. The other next point, of course, is the Trump-Putin meeting tomorrow. And here, Trump spoke with European leaders and Ukrainian President Zelensky yesterday. Latest headline suggests that a good outcome, I mean, a great outcome would be a deal tomorrow, right? I mean, for peace. But if you just parse through the headlines, etc., I think you need to dial back expectations a little bit, because it seems like the tomorrow's meeting is being projected now, I think deliberately so, as a bit of a scoping the arena for what is possible. And then the headline suggests that there perhaps is a trilateral meeting between Ukraine, US and Russia towards the end of next week, potentially, possibly, hopefully. So expectations for what can come out tomorrow in terms of an actual signed and delivered deal, I think have to be dialed back, because that is essentially what we're picking up from everything which is out there. So I'll just circle and tie in the levels here. Yesterday, of course, the market came up, but we're still not out of the woods. I mean, the inclination is for the market to go higher than as compared to lower. But you got to clear these resistance levels, right? The first one is 24,702. After that, the 20-day moving, by the way, we didn't clear it yesterday, 24,702, which is the high day before yesterday. If that gets taken out, the next resistance is 24,782, which is the 20-day moving average. And then you got the 40-day exponential, 24,840. All these levels within about 150 odd points in the Nifty is very, very close by. And that's the reason why I'm putting this out. Support for the Nifty, 24,337. Bank Nifty resistance zone is 55,582 to 55,652. And the support here is at the low of 54,905. Gift Nifty gives you a quick sense of where we're likely to start. Absolutely unchanged. 5 or 6 points lower as we go into this long weekend holiday tomorrow. Rima.
Truncated week, long weekend, and plus we've got the Nifty weekly expiry today.
Yeah.
But it's a flat opening for the Gift Nifty. In fact, Asia too is very, very quiet. Nikkei is retreating after hitting record levels yesterday. So the Japanese market is a cut of about over 1%. Hang Seng is up about 0.5%. Taiwan is down. So it's a mixed picture across Asia this morning, but it's been a winning week for Asia broadly. Big gains seen in Hang Seng, 3.5% up so far. You've got the Japanese markets, despite the correction today, rallying more than about 2%. And the Indian markets too, so far, are up close to about 1%. In terms of the other big headlines, Trump has signed an order to ensure resilient supply chain for essential medicines in US. So he's basically signed an executive order for essential medicines by filling the SAPIR, Strategic Active Pharmaceutical Ingredients Reserve, with critical drug components. So it could impact API makers. We'll have to wait by to see on India. But the goal is 6 months supply, of the key drug ingredients to be stored domestically. So pharma will be on our radar. Also for China, interesting news coming out that they have experienced negative net new loan growth for the first time in 20 years. Basically, the amount of loans repaid by the households and businesses exceeded the amount of new loans issued. This hasn't happened in the last 20 years, and it happened in the month of July. So it questions, the confidence that households and businesses have in the domestic economy, that the loans repaid exceed the new loans that they want right now. In terms of flows, the DII's net bought 5,600 crore in the cash market. Yesterday, the FI sold about 3,644 crore. In terms of what to watch, as I said, Nifty weekly expiry today. ICICI Bank has lowered the minimum balance requirement to 15,000. There is that big JSW cement listing. Subscription was pretty strong. It was a large issue, 8 times plus in terms of an overall subscription. And even electronic makers, because there was this 90-day waiver. Electronic exports from India to the US were not tariffed. There was a 90-day window exemption, and that expires today. So are we going to see an extension of that window of relief? That remains to be seen. And in terms of big earnings to watch, Glenmark, Ashok Leyland and IOC. And earnings reaction we'll get to in our top 10 segment. But Nigel, what are you looking at?
Well, let's keep an eye out on the weekly expiry. The second half of trade will be volatile because today you have the weekly expiry that will play out for the Nifty contracts as well. And we are bracing to break that losing streak. Remember, 6 straight weeks the Nifty has ended in the red. Today we need to defend this mark to break that losing streak and in fact end mildly in the green. So let's hope that does happen from a bullish perspective. The problem in the last 1 month has been the Nifty Bank. So yes, the Nifty has lost close to around 2%, but the Nifty Bank actually after leading has underperformed. It's down close to around 3%. And even yesterday's trade, though we ended higher, the Nifty Bank underperformed, and there are mild shorts that are getting added into the system. And the index that's more shorted actually is the Nifty Bank, because yesterday as well it underperformed, and you did see some addition in terms of open interest. For the market on the whole, well, if you look at what the FIs did, that short covering bounce actually is still awaited. They're holding on to the short positions, very, very meager shorts covered yesterday, 866 contracts, that's hardly anything, and they continue to remain at around 91% net short. So the markets are net short, the FI is aggressively net short, they're holding on to that short position. Well, in fact, if they get caught on the wrong side, that'll be interesting to see how things play out from there. But in yesterday's trade, well, if you look at the puts, there were more puts that written than calls, both for the FIs as well as clients. So that's giving you some hope that maybe the near-term low, or the 200 DIB at around the 24,100 odd, will hold out. And the options data should come up for you on the screen, because yesterday we saw aggressive writing. 24,600 put, 24,550 put. Now, these put writers, they are looking to eat into this premium. Yesterday, at least, this premium was down by 40 to around 60% in trade. So they are looking to eat into this premium, and they are hoping that the lower levels do get protected. So let's get the levels up for you on the screen. Well, crucial support comes in at around this 24,450 mark. That's the important mark you're looking at on the downside. The resistance comes in at around 24,750, and the 20 DMA as well in that vicinity. So this is the crucial resistance mark, while support comes in at around 24,450. In terms of stocks that I'm looking at, well, let's see whether or not PVR will be the stock in focus, because you have two big releases. We have Rajnikant's movie that will be releasing, as well as you have War 2. And, the pre-booking was pretty okay for both those two names. So we'll keep an eye out on PVR ahead of the long weekend, whether or not people find their way to the cinema halls. And the other one I'm looking at is PNB Housing Finance. I've been making this point that the open interest gradually is coming in lower on PNB Housing Finance. So it had moved into the F&O band. The total open interest needs to shed by around 2.5%, and then it could possibly come out of the F&O band. So that's a stock I'll continue to keep on my radar.
All right, Nigel, thanks very much for that.